Hello traders, Gary Wagner here just after 12 o'clock in Honolulu, 5 o'clock in New York. It is Monday, November 13th, 2017, and this is the Daily Report for Gold and Silver. We did have a modest recovery from Friday's sell-off with gold trading higher on the day, closing up about $4.30, closing at $12.7850. On this show, we will talk about a special trade alert. This is the trade alert rather than something separate, although I will send something out on SMS text message referencing this show, and to watch that, we are suggesting that you add to your position. Silver also up today, up about 18 cents at 17.05, and that all in light of a fractionally higher dollar, up about 0.1%, 12-point gain at 94.40. Traders, a nice moderate upside move in gold today, and after following Friday's debacle in which we had a single trade of 4 million ounces taking the market down pretty dramatically, down about $10, we can see that with this large red candle. We can see that today we pretty much have an inside trading day in which it opened and closed within the range of the prior trading day, meaning Friday, A. B, we had a low that was above Friday's low. However, at the same time, we definitely had a high that was below the high of Friday. So I believe that we are in recovery with gold currently trading at $12.78, putting it up about $3.80. About 0.3% in terms of the upside tick. We are long, and we're long from above this, approximately 87. And what I talked about on Friday's show is that rather than being victims to this single trade, I think we should attempt to take advantage of it. And to that end, I am issuing a trade alert for aggressive or non-conservative traders to add to their position. Those taking the call will maintain their stop below the low that was achieved Wednesday of last week. We went 3 days back when we initially put the trade on. So you would keep your stops below 12.72. If you were to add one position to each position that you have in this area, you would effectively cost average your position pretty much in half. If you've got 87 and 77, now your effective cost average position is roughly at around 12.80. And so that is my recommendation. The one thing that we can say is, even though the market had been trading sideways, we talked about the fact that we were looking for that breakout, and we got that solid breakout. No doubt about that. We got that on Thursday of last week. Of course, that was very short-lived when we saw the market plunge down on Friday. But at the same time, we've always maintained a price point that has been above the 200-day moving average, positive bullish side, bearish side, it has been below the 50-day moving average. So what we want to do is we want to see some sort of a continuation of the fact that we do have our 50-day above our 200. That's good. But the second thing we'd like to see is our price of current gold move at and then above the 50-day moving average. That would be about the most bullish statement at all. Currently, that 50-day moving average is sitting at approximately 12.95. And so traders, as far as my current numbers go, we currently show support at two different levels. Absolute major support still has to reside at 1263, and 1263 is a 61.8% retracement, and that's a retracement of the single largest rally held this year, $163 move from about 1200 to about 1362. We have our next level of support resides at approximately 1272. Now, 1272 was the low that was achieved on Wednesday's trading of last week. And then when the market did come down on Friday, as you can see by the single red bar right here, it did have a low, but the low came in at 1273, which of course is $1 above our current support level. Now, in terms of resistance, I still believe that we have minor resistance at our former breakout point, which was 1282, and that is our 50% retracement mark. And then, of course, above that, we've got major resistance, I believe, at $1,300 per ounce. So traders, I do recommend the following. First, maintain your current long position, maintain your current stop. Secondly, as I said at the beginning of this report, I am recommending that you add to that position to effectively cost average your cost per ounce of gold adding one position to each long position you currently have. Maintain stops on all of them at 1272. And traders, lastly, I do want to touch upon something that we have not talked about yet on the gold forecast, and it's something that we will be looking to implement either as the entire focus of the trending markets module, or if there's an extreme amount of interest from our gold traders, simply add it to the gold forecast standard module, and that is Bitcoin. It was announced today by the head of the CME that they will be launching their Bitcoin futures contract about the second week of December. Effectively, I thought this would be either end of December or beginning of January, but now that I see that the timeline's moved up, I need to ask you, our subscribers, what interest you have in trading Bitcoins. Right now, Bitcoins are such that you can buy them or sell them, but you certainly can't trade them. You can't go long and you can't go short. Considering that we had this market move just a few days ago up to almost 8,000 and from there trade down to about 5,500 before recovering almost $1,000, currently trading at 64.67 per Bitcoin, it really makes sense to look at this particular cryptocurrency as something that we want to involve in our daily trading. But I want to leave that up to you, our subscriber. Please send us an email. Let me know your thoughts on whether or not you want to strictly focus on gold, whether or not you'd be comfortable with it as part of the trending markets trading module. That would be the entire focus of the trending markets, or whether it's something that you simply would rather not view at all. That is of great importance to me because remember, I'm here to serve you. On today's report, I really focused on the fact that what we saw in Friday's trading, I believe, was a one and done, an aberration, so to speak. The fact of the matter is there was no new fundamental data or events that occurred. There was also no economic data that came out to support the kind of move that we witnessed. As such, the fact that we saw a small recovery today, I believe, was to be expected, and I am also expecting a gold pricing to return to the former area up and around the 80s. On today's report, we talked about upper level resistance as well as support, and to that end, I think that aggressive and non-conservative traders should absolutely consider adding to their position. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review.